This region around the Great Lakes has been called a heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong. So,
manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
there's a lot of money on the sidelines. So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Wednesday, September 17th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, December corn up a half at 4.30. November soybeans are up a penny and a quarter at 10.51. And December Chicago wheat was up a quarter at 5.34 and a quarter. No export sales announcements here this morning, so we'll jump right in. We're going to get a Fed announcement here later this afternoon. Comes out about 1 o'clock Central. Looking for a quarter point rate cut. So the market's pretty well resigned to the fact that they're going to get a cut today. I think the big highlight will be what the forward guidance is, how many cuts that they're looking to do down the road. So I know outside markets right now, the Dow's up 57. Bonds are slightly higher here, so we'll keep an eye on the outside markets. Outside of that, Dustin, we saw a big break in the dollar yesterday. Certainly ahead of the Fed here today. I guess share some thoughts as we go into this morning, and then we'll throw around the room.
Yeah, I think currency. There's a lot of things that are underpinning the market right now. I think the fear about the yields not being out there. Anecdotally, we've heard that in a lot of situations. But I think the currency is one of the bigger moves. We've almost had an 18% rise in the real versus the dollar. The dollar is weaker against many other products or many other currencies. Certainly weaker against things like hard assets like gold. So one of the things you're seeing is that like the spreads are staying wide on this rebound. Like DEES-26 corn is gaining a lot of the same value that DEES-25 corn. Not all of it, but a lot of it. Which, if you're going penny for penny all the way up, and it's just simply a flat price rise for both products, then it's kind of a prime example of a denomination issue. A dollar denomination is supporting all of those products, not just the front month. If it's just the front month, that's more of a rationing, supply side concern or demand side concern. So the fact that the DEES spread has been kind of hanging below its major moving averages and the DEES-25 contract is going above its major moving averages, it makes me think that a lot of this could be somewhat currency related.
The opposite, right?
Yeah.
I think the opposite of what you said.
What did I say?
You said DEES-25 above the moving average and DEES-26 below.
No, the
DEES-26
DEES-5, DEES-6 spread is hanging below the major moving averages, the spread itself against its spread moving average.
Right.
Which is, it's not intuitive if you're not looking at that every day, but you just think about that there's a value to the spread. There's a difference between those two contracts, between what DEES-25 is trading at and what DEES-26 is trading at. That value charted across 50 day moving average or 100-day moving average, we're at the low end of where that average has been as a spread, whereas the actual flat price contract, the DEES-25 contract, is on the top end.
Yep. So
that just those two metrics show you that spreads have stayed wide and flat prices rising, and which to me is a currency issue partly. So, but what I don't really understand, I guess, is why corn is leading the charge when we keep getting all these acres. That's the surprising part. I mean, it's not like we're like, we don't believe the yield. Well, certainly that probably is somewhat the case. But like when you get another 1.3 million acres, it's not like you can say, I don't believe that. These are certified FSA acres, and that's like immediately that's a two bushels of leeway in my mind.
I mean, unless the market feels the farmers are going to sell beans and not sell corn.
Yeah,
right?
but
it could be just in harvest.
I mean,
but you have to have you have to have somebody to sell too. Like you have to have
a sponsor of the short, right? Like if you have, we know there's been very little farmer selling. Now we're getting ready to go into harvest, so that's gonna be interesting to see how this plays out the next 45 days. But you have managed money short. I think the end user probably hand to mouth, which makes sense because, this huge crop that's coming, yada, yada. You've got a big export book on a record actually for new crop. So you've got a lot of purchases, not farmer selling. Crop insurance has probably been the crux of that, not having to sell. Right, wrong or right to that point. And now you're going into harvest. So I think you've had, to get up to these levels, I think makes sense just for the supply and demand of futures for today's date. I think it's going to be interesting now the next 45 days because farmers are going to have to sell some stuff. They can obviously store all those kind of things, but there's going to be, regardless of what you want to argue the yield is, there's going to be a lot of bushels with these acres. And, you saw Sept corn go out a big carry. So it's not like we were super tight at the end, which is another thing that we're going to have to figure out by the end of the month when we get stocks numbers. So I think it was more of a supply, in my opinion, so far, it's been more of a supply demand of futures. And we can talk national yields and, I think we've talked about this a lot on the show. When prices go up, there's a flood of all the fundamental reasons that we went up and we go down, it's the other way. I think it's just been a kind of a rebalancing of like, okay, maybe people were underbought. The farmer hasn't had to sell. And, we got down to such low levels that there was no reason to sell. Now we're kind of at that, in my opinion, we're at the price, A, on the charts, and B, on the time of year, and C, on, where people need to sell, that there's probably more of a balance here. So
Yeah.
we can all talk fundamentals and all those things. I think the reason the spreads are wide is what you talked about, Dustin, on currencies, but it's also interest rates, and it's also just there's a big supply. So we could rally another $1 and have spreads get wider and wider because there's, as flat price goes up, the U.S. farmers incentivized, the opposite of what's been happening in Brazil for the last 5 years.
Yep.
So
I would add to this too, because I think when you're talking about like 98 million acres of corn and 80 some million acres of beans, like there's a massive switch toward a higher volume product, right? 3.5 times the storage space needed. And so if we're talking, like, I think I saw, maybe it was Farm Credit or somebody put out like this shortage of storage projection, like that's like, if Jason's right and farmers sell their beans first because you raise cash quicker, what about all the, where's this all going to go? I mean, I know there's variable storage with bagging systems, but like, even growers that will put down hundreds of thousands of bushels of corn on the ground, there's still a limit to what they want to put down, right? Like there's still like, there's space limitations and there's like cash flow needs. And like, it's a lot easier to start selling corn at weaker basis and weaker price when you've got an extra 10% more yield or 15% more yield in some of these areas. So I'm really curious, like you, like what's going to happen in the next 60 days, because if we have truly 98 million acres and we have something above 180, we have a storage problem, I think. And we have low river levels. It could get really weird as we go into first notice day.
yeah, what's interesting too about that is a lot of the acres that were expanded are west, right? So you've already seen those really bad basis levels. So you've seen a lot of acres that are, Dakotas, kind of traditional, I'll say traditional kind of new bean areas that, went away from beans into corn, maybe because of trade wars, whatever the different reasons are, but even less storage out those areas relative, right? If you look at where storage is, it's Illinois East has a lot of storage, and a lot of the acres are Iowa West,
Right.
which is also the better, supposedly better growing season. Look at like Kansas, Nebraska, dry land corn. I mean, you see these super weak basis levels there, and I think there's a reason for that, obviously. We're not getting demand off the PNW, and that's where all the bushels are. or I shouldn't say all the bushels are. That's where a lot of the extra bushels are this year. So what happens to those? I mean, they got to be priced to move. I saw some of those states, I mean, tens of millions of bushels short of storage. So yeah, to your point, you can back some of it. You can throw some on the ground. You can do some of that, but I think a lot of it's going to move.
We had a question come in, guys, on the text line. But what's your opinion on basis contracts? So we can have a basis contract problem like we saw last year in corn. Any thoughts there?
Yeah, it's. I mean, we still have the same function, which is, growers can deliver. They're unhappy with the price. They can go get 70, 80% in some cases of the value of that contract, and then just defer that selling decision. It could be a problem. I really don't know. I mean, it's like every year you think it's kind of cleaned up, then like it surprises you and it just happens again. So I would have thought it's kind of starting to be a thing of the past, but with all these bushels, it may be easier just to say, all right, I'll deal with it later. And a basis contract is formed. Yeah, I would still be mindful of that as you go toward those first notice day windows, especially like the 3 weeks prior to first notice day. Just like keep that in mind.
Yeah, I agree. I think 100% it will be. I think it's the replacement of the CCC loan. Like you can go get 70, 80% of, call it $4 plus corn and stay long. It's not a good investment, or hasn't been a good investment because you're paying the carry and you're fighting that mechanism, but it's check into cash, right? You get cash and you can stay long without storage.
Well,
So
I would say too, if these bridge loans get approved, that's only going to exacerbate that, right? I mean, to your point, you do get 70%, but if farmers get direct payments right at harvest, right when cash flow needs are met, that just gives them the ability to do that longer, maybe.
Yeah, I don't think
Or
it's
to a bigger
necessarily
extent.
good. Yeah, it's not necessarily a good ROI,
Yeah.
not necessarily a good business decision, but I think it will be definitely a big factor.
Right.
And it's it might work out too. It's just a gamble, right? Like it could work out. It's something could happen, but you're paying. It's the reason why a lot of these index funds don't work well in commodities, because you're paying interest, right? Like you're not earning interest, you're paying interest to have that long. So you're paying that carry. So it's a negative dividend when there's supply.
Last year it did work really well for those that just held it until late Jan, early Feb, and just sold, right? Because they just got out of that time frame when everybody else was selling. But if they kept holding it until end of Feb, then it didn't work out, right? And beyond. It's timing and it's a gamble, but like I just think a bit of education would help too, because I think a lot of people are not familiar with what exactly it is. Why do they only pay you 70%? It means that the location is retaining 30% of that value. That bushel is being moved. All that's in your name is basically a long futures contract at that point. Mm-hmm. So like you also have the ability to do that yourself on like a DIY project where you go, get 100% of the value of that crop and you go buy a board of trade contract. And then you're putting up, something like 10% margin and maintaining 10% margin. There's literally no difference there of a basis contract and a long futures contract held by the grower.
Except for the basis play, right? Like if you're getting 80 under the board right now, right? But if you're doing a basis contract, you're still losing that 80 cents.
Yeah, that's the same
to your
thing.
point. So that's the exact same thing. Like the only way to make that is to actually like store it yourself.
Yeah.
Because a lot of that improvement's going to be basis.
Yeah, or
in a lot of
commercial
cases.
storage. Yeah,
or commercial, but that's all priced to. I mean, that's so hard. My opinion.
I know it's a very expensive.
They price it. They price that in, so it's.
Yeah.
I mean, it's not easy. It's not easy. Like it's not an easy spec play.
No.
Right. The only people that actually make the money are people that take the physical, store it, sell out forward, and earn that entire carry.
Yep.
So I think there's a lot of misconceptions about I'll go buy the spread. I'll go deliver it and buy the spread. Like, that's not how it works.
Right.
The only way. So
Now, to be
long
clear,
answer there, Dan. But yeah, I think it's going to be a problem.
No, it's good stuff.
Problem. It could be good. I mean, it could still work, to Dustin's point. It's just that I think people are going to use that mechanism to get cash for sure,
Well,
and they're not going to like the price.
No, and my takeaway is that, again, give us a call. Let's visit about it, because everybody's situation could be a little bit different, and we got to talk through what makes sense. And to Dustin's point, like, there could be better tools that you could be using, so keep yourself open to all the different ideas, and let's visit about it. Very good. We just we got a couple minutes here. Ryland, we saw some cattle on feed estimates here this morning. Looks like we got box beef coming off the highs there. Finally, a little bit of reprieve.
Maybe.
And hogs got fresh high in October hogs. So I guess give us a few thoughts here this morning.
Yeah, absolutely. Well, as we know, big down in beef. Beef was off like almost $6 in choice and almost $6 in select. So I think you're going to create a little bit of caution here. I mean, as we've been talking about, seeing some cracks in cash, seeing this beef market weaken, seeing the kills start to pick up. So it just feels like this market has proven to be very resilient, especially on the technical level. Don't imagine much is going to change unless we got some big surprise here on the cattle on feed report. We're expecting, at least this point, on feed inventory Sept 1, not right around 99.2%, which would be the lowest in August supply in 10 years. Placements looking for 91.5 and marketing's looking for 87. So we're going to bake those numbers in for the next couple of days. Wouldn't be surprised to see a little bit of risk off beforehand, but that usually tends to mount after we start to pick up, see what cash is going to be, or at least some of the early indications. So we haven't seen any cash yet. Waiting to see what happens today. So I think you just got a little bit of a mixed expectation there, just because it was weaker last week, and the board's been up a little bit here, but not as much as I think as everybody would like to see. So we're going to see how that kind of shapes up. And then on the hog side, sweep and key reversal. I mean, we made a new contract high, but we did close on the previous session's low. So I mean, I don't know if that is any kind of top. There's going to be a lot of top chatter just from a technical standpoint, but all in all, things weren't too bad. Carcass was only down $1.80 yesterday. Belly's kind of taking it on the chin, down 223. But overall, cash is still pretty firm here, and it feels like the market really wants to stay cash focused right now. Seasonally, we do trend lower, but we are really holding on, and the volume is picked up. The volume is staying here in the market. Managed money still want to stay long. So at this point, it seems like we're going to try to see if we can hold support of some of the major moving averages.
Very good. Appreciate the update there. We just came into the open. We got December corn unchanged now. 429 3/4 is the last. November soybeans are up 3/4 at 10.50 3/4. That's the last there. And December Chicago wheat is down 3/4 at 533 1/4. A couple of things to note. Again, the Fed will be out with their announcement at 1 o'clock Central. Also, we'll have weekly export sales out tomorrow morning, 7:30 Central. We'll go through those. Visit about those in tomorrow morning's War Room. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports us on a daily basis. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.